So overnight we had started the quarter holiday in Australia and China. In fact, China's on holidays all week, but inflation in Switzerland starting to come off a little, and interest rates starting to hurt manufacturing in the US with a weaker number. But go figure, that means everything's great, so let's go and buy stocks, which is what they did. Wanted to focus on commodities because it's a bit of a mixed bag, particularly for Australia, because we've got iron ore weaker, we've got natural gas weaker, two very large export industries for Australia. And we've got wheat, we've got the commodity index off a little, coal off a little, gold, which is not a huge export for Australia, but we do export some, up dramatically, whereas copper sort of going sideways. So with all that in mind, we're seeing the Aussie dollar a bit stronger, but that I think is more the case of a weaker US dollar overnight, as the expectations of the pivot and that interest rates are all but done. I noticed Ray Dalio came out this morning and said short-term interest rates, i.e. the sort of overnight rate to the 2 years, are about where they should be, and he's the bond king. So that's interesting to see how that'll play out, whereas the Fed also reiterated over the last couple of days that interest rates will remain higher, leaning into the wind to try and get price stabilization, i.e. inflation back in control. But what we're seeing is a bit of a bounce in commodity currencies off the back of weaker commodities, which doesn't really make sense. So pound still doing a bit of a relief rally. I see no reason why to be buying into this, that we should be long-term holders of sterling, looking for a sell somewhere around this area to fade it again. Similarly, looking for the euro somewhere around here, around the 99.5 mark, and the US dollar around that 110 level, which is kind of around that previous significant high, and we're just patiently waiting for that to happen. As mentioned, stocks got crazy, as they tend to. They don't want to be the last one on the gravy train. Buy the bid and buy it rapidly. Aussie's got a bit of a double bottom there. If we're going to have a look at that, a bit of a double bottom there for the Aussie. But US stocks, bullish engulfing bar, which suggests to me that it might come back up here and fill this kind of gap in. And that's around just over 3,800. But long term, I still expect that larger interest rates are going to hurt the economy, going to hurt business profits, and this should be under 3,000 most likely by the end of the year. It's a bearish call, but these are really significant times, and all we need to do is go and have a look at the inflation, interest rate market. And yes, it was off overnight, but historically we're at significant highs, and this 30-year downtrend is well and truly over. So just be patient. There'll be trading opportunities. I wouldn't necessarily be FOMO trading stocks and trying to think that it's all over, because all it will take is one bad headline and it'll be back down again. And just patiently wait for the majors to set up. Thanks, guys.